Good morning, everybody. Good morning, everybody. Good morning. So, give me just a couple minutes to get set up here. So, let me just type on the screen really quick. Alright, I will be mute just for a second because I have to grab a couple things. But after that, we'll get into it. Good morning, everybody. Thanks for joining. I will be right back. Alright, sorry about that, everybody. Okay, let's get started. So, we have about 10 minutes till market open. Now, today, we're not going to be focusing on the day trade so much, but I will be. My Weeble crashed for a second. There we go. Okay. We're not going to be focusing on the day trades, but I will be engaging in some. So if you do see me, swapping over to the SPY, don't really take too much thought about that. Today we're mainly going to be going over kind of how to target some longer duration trades and how to find really good setups for very cheap. Now, one second, because I need to open my phone. Good morning, good morning. Okay, so really quick in chat, is there any symbol anyone wants to go over really quick that we could start with? Because I'd prefer not to do this on the spy, but I will if necessary. There's a couple of really good symbols I'm looking at, um, which we will go over one in the pre-market here before the market opens. Snow? Okay, perfect. Let's go over snow. Okay, so for Snowflake, here's some of the first things that I look at when I'm looking at a long-term trend. Okay, I'm not looking really too much at the candles. I'm not looking so much at the structure. One of the main things that I'm looking for when I'm wanting to enter into a long, and let me get my drawing tool out. We will delete all. We used to trade snow way back in the day. So one thing that I'm looking for is how does a symbol respond to the lower Bollinger? Let me actually draw a circle here. That was like the worst circle ever. But how does the symbol respond to lower Bollinger moves? And why are we targeting, again, the lower Bollinger? And again, this is on the daily time frame. Well, lower Bollinger is usually when we're kind of off the road, right? We talked about that before, how within our Bollinger Bands, the market is going to be trying to trade within that range. It will be trying to either go to the bottom Bollinger, to the top Bollinger, bottom, top, rinse, repeat, but still trying to hold within that center towards that 20 mile line. Okay. So one thing that I look at is how is the symbol responding to these lower Bollinger moves, because these are supposed to be very quality buying ranges. Well, we see within snow so far that there has been 3 lower Bollinger moves in the last, basically since this year. There's one in December as well. But how have these moves responded to it? We've seen a little bit of buying. Let me go ahead and just do an arrow instead. See a little bit of buying, does not push into the upper Bollinger, breaks down. Okay. A little bit of buying, breaks down. A little bit of buying, breaks down a little bit, and then completely blasts off. Okay. So this shows that still within those lower Bollinger moves, even if you were buying equities back at that first lower Bollinger move, you'd be still within profits on your shares. So that's one thing that I look for, is that how does it respond to the lower Bollinger? And obviously we're starting to see a massive shift in the trend here. So with that shift in the trend, we see that, okay, we're starting to claim really, really massive ground here. Where is this going? We'll start targeting the top, okay? And the reason why we target the top here is because we're starting to see a cup form. So where is snow likely going? We'll make a square just to make it a little better. Probably right in that range. But is it a good time to buy currently? Not yet. Why is it a bad time to buy? Because we're within that upper Bollinger. And remember, upper Bollinger is when we short usually. Not saying this can't run all the way to that point, but what should you be looking for at this point? Basically a pull down towards that 20 mile. From that 20 mile, that's how you line up a very, very nice trade. Now, going over this, assuming, we do head back to that 20 mile, that probably pulls us around that 190 range. How cheap do you think some of these 280 calls would be at that 190 range. Basically, they're $100 out of the money, but the market's telling you that's very likely where we're going. Um, and you pull that out a little bit too, just to give yourself some time. So, how cheap would that be to be able to go forward an August contract, basically $100 out of the money? Then, when it comes August, that starts running into the money, hits the top of that cup, and then you have a ton of runway on that contract. Plus, it's now either at the money or in the money. Okay, so even though we're starting to have that breakout, this is a very positive thing. This is something we can look at and say, okay, obviously bulls are starting to put a lot of weight back into this. These previous selling ranges all were bought up. So this looks really good, but you do want to see it pull back a little bit because again, within the technicals of the daily time frame, this is telling you, yes, we're currently a little overextended. We do need to cool down a little bit before the next big move. So that's kind of what I'm looking for at Snow. Good morning, everybody. So now we're going to go over one of the ones that I'm looking at. And one of the ones I'm going to talk about, I'm going to type the contracts in chat first because I do want you to watch list them. Just one moment. Thank you. Yes, I am feeling a lot better. I've been taking antibiotics and everything. It's been helping quite a bit. I still have it in my chest a little, but it's, you know, tenfold better. Okay, so we're going to be looking at Uber, okay? And we're going to be kind of using the same thought process here. Is that on Uber, on our daily time frame, this doesn't look that great. Many are going to say, okay, there's this large head and shoulders. It looks like we're going to continue breaking down here. Now, one thing that I'm looking for is that, again, how does this symbol respond to lower Bollinger moves? Well, I see a lot of buying each and every time. It usually takes almost all the way back up to the upper Bollinger. So what's that telling us here? Basically, we're at this lower Bollinger range. Yes, we didn't catch it perfectly. It would have been perfect a couple days ago. However, this is still at this lower Bollinger. And what's that telling us? Very, very likely we're going to try to push to that upper Bollinger. So why am I starting to target those 80 calls? Okay, and those 80 calls are super cheap right now. Those 82.5 calls, super cheap. Well, because if we're going to start seeing a buying trend, that's going to form quite a significant upside. Okay, now we're not trying to target this full cup yet because obviously we're not seeing a breakout, but we're just targeting from the lower Bollinger to the upper Bollinger. And with that, we can take very, very, very cheap contracts in this to push that upside. Um, so with the market opening, let's just kind of look at some of these contracts. So these Uber 80 calls right now, they are about, just buy one to see. I'm going to say they're probably about 32 to fill. Just one second, I want to get this order placed. Move it up to 35, see if that fills. Nope, it's not filled at 35. Let's try 0.37. Let's try 0.39. Okay, so we got that contract at 0.38. Now, this is something that I can't show on the screen because I can't pull up the calculator. But if you do have your calculator on your Webull, go to the contract. And again, this is the Uber 80 call. Okay, so go to that contract and type in the underlying price for $80. Okay, and let's set that to June, let's say 12th. So that's saying that this contract's going to basically run roughly about 440%. Okay. Um, this contract that we got at 0.38 should roughly sell for about one about $190. Okay, so we spent $38 on a contract that at the very, very minimum should really probably run to about $190 to $200. Okay, that's a really good contract. That's a really, simple contract too, and it's very low risk. And why is it low risk? Because we are at this lower Bollinger. Okay, you can see that on this symbol. Usually when we get to this lower Bollinger, after those two sessions, we usually do not continue breaking down. Okay, so this looks like a very strong trade. I like it a lot, and I think that there's a lot of upside to it. So that's how I'm trying to think about some of these trades, is that target the weakness. From that weakness, how does it usually respond? Usually responds with pretty massive buys to the upside. Okay. Another one we're looking at, which I'll type these contracts in here very, very soon, is Starbucks. Now, what's one thing that I'm seeing here on Starbucks? Just immediately, there's a massive cup up to this 113.64. Well, what happens when we usually get to the lower Bollinger again on this symbol? Lower Bollinger, big move upward. Lower Bollinger, move upward. Lower Bollinger, move upward. Lower Bollinger, move upward. Okay. Well, we're back at that lower Bollinger. So, where's the move? Very likely upward. So, looking at that, we can say, okay, these July 115 calls, and I'll type these out in just a second. And make sure when you're trying to get some of these contracts too that you're not just doing a market buy, because the spread between the contracts can be a little large. Okay, cool. So that got filled at 0.47. So let me type this out in chat. After the two sessions, I'll talk about that in just a second. That's the lower Bollinger mechanics. But let me type these contracts out really quick. Just 1 second, everybody. For July 17th. Okay. So by the two sessions at the bottom, what I mean is that lower Bollinger mechanics, and this works the same with upper Bollinger, is that usually it wants to stay in that range for about two iterations of whatever time frame you're on. So the example here, even though you see this push down a little bit, I can almost guarantee if I go back to that session, look on the hourly time frame, that this probably did not close below the lower Bollinger. But usually we look for the close below the lower Bollinger, and from that close below the lower Bollinger, the next day we anticipate and fully expect a lower low from that level. Okay, so day one, you secure the lower Bollinger range, and that means closing at or below the level. Day two, we expect a lower low. And from day three through day five, we expect an upward consolidation back to the 5 mile. So I'm not thinking this candle right here is going to count, but I can't say that for certain. But it's very likely these were the two lower Bollinger sessions where we had that first day where it really pushed and closed below that level. Day two secures the lower low, and from that point, we see that upward consolidation. Now, I don't have the moving averages showing right now, but I guarantee you the 5 mile would be in that range. So from that 5 mile retest, heads down towards the lower Bollinger again, finds a rejection, back up towards probably 10 mile, 5 mile again, retesting those levels, hits the 20 mile, finds a rejection at the 20 mile, taps the lower Bollinger. From the lower Bollinger, we see an upper Bollinger mechanic here, which this works in the inverse, way of a lower Bollinger mechanic. Is that day one, you secure the level. Day two, you generally see a higher high. Okay. And that's something that's very consistent with a lot of, just bigger stocks and bigger companies is that you can usually depend on those upper Bollinger mechanics or lower Bollinger mechanics to find extremely quality times to either short or go long. And even if it pushes down on you, this isn't like the zero DTEs where you have to stress a whole lot. And the perfect example was back on Snow when we had 3 different entries that were still in a downtrend, where if we were entering into equity positions or into very dated calls, those all would have paid off very, very well in the end. Um, Same thing applies to a lot of these larger symbols that you can buy this lower Bollinger, and the true expectation is that you're going to continue heading upward. So with Starbucks, we see that currently we're at basically $98 or $97, excuse me. So that puts our upside, almost a whole $18 above us. Okay. Is it very likely we're going to get there? I believe so. Reason why? Every time we get to the lower Bollinger, we generally see pretty large buying. Um, it's just a very, very standard trend. Okay, so that's a couple symbols that I'm looking at here that I think have quite a lot of potential. And another one here is open, which I want to delete some of these previous channels, they don't matter. And yes, we did try to day trade this last week. I did have some success with it. Did not run as hard as I thought it would, but now about a week ago, we were at that lower Bollinger where we could enter basically at below this $4 range, this low $4 range. And the upside from that basically takes us all the way to this, I would say probably that $6 range. Because if we're going to push into that upper Bollinger, we're going to, close this cup to the upside, close this smaller cup. And so this gives you a very measured and easy trade. Now, the setup isn't super, super good to continue entering into as of this second. You do want to let it pull back a little bit. However, if we see the continued buying, then where is this going? Okay, very likely to this $10. Okay. Um, So is it reasonable once we get back down to this lower Bollinger to say, okay, could I possibly get some very dated 10 calls on this, probably for next to nothing? Um, yeah, absolutely. Do those have a very high odds of, making money? I think the odds are very strong. Yes, we're seeing open in a downtrend, but with each lower Bollinger move, you generally see profits on those. So if we're going to see a change in the trend, which we're starting to see this flatten out a little bit. So it's no longer just this sharp knife to the downside. It's now flattening and starting to build some bullish structure to head up. Okay, so that also supports our thesis that, okay, maybe I could look for September, November, December 10 calls. And just looking at those, let me go ahead and open my phone really quick. And let's just take a look. Let's say the December. So yeah, for the December 10 calls, it's currently about $56 a call. Okay. Well, what happens if that runs towards $10 and let's say in November? Let's pull up the calculator. Let's change the date to November 1st. Let's change this to $10. That would take this contract that we're basically buying at, what did I say, 57, something like that. Um, it would take that all the way to about $150. Okay. And that's not including any IV. That's not including a lot of the other Greeks involved in it. Um, this is basically considering the IV as a OTM out of the money contract. So is that a very safe trade to take? I mean, could you sit on a contract for another 6 months to see potential, you know, that's basically 161% upside on that contract. Okay. So that's how we're trying to think about some of these trades is that if we can buy at very quality moments, then we could set up some dated OTMs and we can target some of these previous ranges that have seen buying. Okay. So what's another symbol someone wants to go over? Let's see. So there's Snow, Palantir. We'll go over Palantir and then we'll go over now. But I do want to just look at the Spire really quick. Now again, we're not focusing on the day trades, but I am going to kind of comment about what I'm seeing here still. So we see this major inverse cup that has formed since basically last Friday through the weekend. We had that gap up, and then apparently there was some bad news this morning, or last evening with the Iran conflict. So from this inverse cup, what I would be anticipating is to pull up towards that 20 mo and to continue to reject. Now, yes, in my post and video and everything, I stated that I am, fairly bullish on the market right now. I do think that we have the ability to push basically into the 780 range within the next 2 weeks if we start seeing some major buying. However, we have our 5 mo currently at the 753.69, which means that the upper bounds of the 5 mo should be around that 755.70 range. So are we going to have a 5 mo test today? Very, very likely. We're seeing this bearish structure formed, throughout the weekend. From that bearish structure, we should get a move to the downside. Okay, so I'm not trading anything just yet. I'm going to wait for my entries if I do decide to take anything today. But this is telling us very, very likely we're going to see that 5 mile test. Upper bounds of the 5 mile is that 755.70. Lower bounds, that's 751.70. So that's kind of the bounds on the day, is that if we're going to 5 mile test here, then we have quite a lot of downside. Okay. If we're not going to 5 mile test, if we're going to, try to buy up the entire session essentially, then what's the upside? The upside's all the way to this 759. Okay. So when we get to the 20 mile, what I'll be doing, which I'm not telling people to follow me on these day trades or anything. Again, take 0 DTs at your own risk. But I'll be setting up a position basically targeting this 759 and, this 754. Basically targeting the upper Bollinger and the lower Bollinger. Those will be two fairly priced contracts, and I'm just going to trade it as a straddle. So that's that. Nope, we have not taken any SPY positions just yet. I'm currently waiting. But let's go over Palantir. And let's go to the daily time frame. You can ignore these two previous levels. These were... This was back when we were getting ready to buy the dip on Palantir. This is when we bought Soxholm for basically like $7 a share. Anyway, daily time frame once again. We see that on the daily time frame, we are currently at the upper Bollinger. Okay. And we see that we're actually having, technically this is the upper Bollinger day 2. So from Friday, we had the upper Bollinger move day 1, which secures the level and brings you above that upper Bollinger. Day 2, we expect a higher high into starting to build bearish structure to consolidate downward back to the 5 mile. Now, one thing that's very bullish here, though, with that said, is that we have finally, or we're going to finally close this cup to the upside of it looks like. Very, very likely. So that 164.57 range looks very, very strong. If that happens, then what do we expect? Well, with the upper Bollinger, we do expect a pull down, and very likely that's going to try to form a handle to continue pushing that upside. So if you're able to buy at the lower Bollinger, then these positions are very nice. From the lower Bollinger, generally you see buying. This was a fairly weak lower Bollinger move in here. Fairly weak lower Bollinger move right there, but very strong lower Bollinger move right here. This would have taken you all the way from the 144 roughly to basically the 198. So that looks very good. So what happens if we start forming this cup to the upside? Okay. Well, it's very likely we could start targeting this next major area, which would be at basically that $200 range. So once we get a pullback on Palantir, whether it's to the lower Bollinger or to the 20 mile, that gives you a very, very primed opportunity to basically take a contract at around the 130, 135, 140 range to potentially see a whole $60 upside on that contract or on the equity side. So again, try to target the lower Bollinger, but if we can start completing this cup to the upside, which we're already starting to show that we're working to complete this cup right here. Okay. Then continuation of bullish structure would bring this back up to that $200 range. So if you could buy the dip, it's going to be, a very nice trade. You're going to see roughly a whole $60 upside on that. Why straddle and not only calls? Just because I'm not certain about the day on SPY. Because again, we do have quite a lot of upside, but we also have a lot of downside too. If we're going to do a 5 mod test to the downside, then I want to capture that. If we're going to have the breakout to the upside, excuse me, if we're going to have the breakout to the upside, then I want to capture that as well. Okay. And I would cut the position that is running against the other direction. So that's how I'm going to handle that. And I'm still looking for that 757.10. So let me go ahead, open this on my phone really quick. So I'd be targeting that 759. So I just want to watch list these contracts really quick. So the 759 0DTE and the 754 put. By the time we pull up towards that 20 mod, the put and the call should be very close to equal within price. Okay, so I'm going to be watching for that while we go over now. So ServiceNow, daily time frame. This was an old note back when we were in this range, pushing downward. But we had this potential, if we didn't close this cup, that we were going to break down to this lower range. Well, that did not occur. And as you can see from buying the lower Bollinger here, we saw massive buying. Okay, we saw buying all the way from that 81 to the 104. So that would have been, a $23 move to the upside. Now we didn't get another lower Bollinger move in here. We got very close, and that led to another breakout. So you're seeing a ton of buying within ServiceNow. So what is that telling me? Is that we have closed this large cup, okay? With this being on the upper Bollinger day 2, what's the expectation? To start downward consolidating, okay? So we should be seeing, and I'm glad I have the arrow already set up, but we should be seeing that downward consolidation. And whether it's to the 20 mod or we see the lower Bollinger start pulling up and we retest that lower Bollinger, but from that range, what's the upside on this thing? It's absolutely huge. So technically we could be targeting that full upside. So if you're able to buy into a quality low entry, then taking, very out of the money contracts on that are very dated are going to be extremely likely highly profitable, okay? Because say we pull back down to, where's the 20 mile? At the 99. Say we pull back down to the 110 range. Well, what's that upside? Potentially a whole $90 plus, okay? Um, and if you buy it at that lower Bollinger, which again, I don't see that opportunity just yet, but if you're able to buy at that lower Bollinger, then the downside is very muted. Okay, we're going to delete some of these previous support ranges just because it makes it a little difficult to see. But the downside is very, very tame at this point because once you get to lower Bollinger, it's not like you're going to continue pushing, 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 pushing. Can that happen a little bit? Yes, but generally you see some form of buying. Okay, lower Bollinger, you see a 5 mile consolidation, breakdown again. Can happen, just like we see that happen with upper Bollinger moves where we go from the upper Bollinger, retest the 5 mile, and then we're right back into the upper Bollinger. We see a 5 mile retest right there. It's a little difficult to see. And from this one, this is the major buy. Now, so far these other buying ranges, some of them would still be red. Would have bought around there. So technically only one of them would have been red at this point. Okay, which would be that 154. So if you're equity buying here, you would have simply added to all those positions very, very slightly. And now this one would be in the green. This one would be in the green. And this one would be in the green. So your average on your shares right now would very, very likely be in the green overall if you didn't just absolutely load it right at this range. Okay. But this is also telling us that now we're starting to buy some of these previous support ranges that we can start looking to this upside. Okay. So wherever this bottom of the handle is, we should be looking for it to basically break out and continue pushing us upward. So that's what I'm looking at for service now. I think it looks good. The OBV on the daily time frame, which is basically the same as our ADL, which the ADL is basically like a bank account. If you see it moving down, funds are being withdrawn. If you see it moving up, funds are being pushed into the fund, so or into the symbol. So we're seeing this absolutely rocket, and it's almost at the point back to where it was when it was at the $200 range. Okay, so a lot of volume in terms of money is going into ServiceNow. Okay, so if you could buy the dip, it's going to be very, very nice to push to the upside. Okay, but you do want to be patient for the dip. You never want to be purchasing long positions really when we're at the upper Bollinger because that's telling you we do need to consolidate downward first. Okay. I already filled those contracts, so I'll type the ones that I have. I took the Uber June 18th or June 18th. I was misreading that. 80 call, and my average on it is 0.38. And then the Starbucks, I took the 115 for July 17th, and my average on that is 0.47. Okay, so that's what I'm looking for those contracts. Now, technically my Uber call is already up 27%. It's already up to this $48, $49 range. So I do see, again, a ton of upside within these symbols. And these are super cheap contracts. Um, Again, if Uber runs to that 80, I can't talk, that 80 strike, then that's going to pull to about 160 to $200 per contract. Okay. So that's super good. And we're buying basically at the lower Bollinger, which is telling us that the upside is absolutely massive. Okay. And we're starting to see that buying already start to kick in. Okay. Same with Starbucks. Starbucks. We're buying this at a very, very opportune time. Lower Bollinger day two. This is telling us that from this lower Bollinger, we should be seeing an upside consolidation. Okay. Now, whether that continues breaking down or not, we'll have to reevaluate. But within the current moment, I'm very happy sitting on a contract for what, roughly a whole month and a half worth of time. I think it's 45 days, something like that, uh, for the expiry on that, for us to push back up and just simply reclaim some of these previous levels. Okay, I think that's very reasonable, especially when we do see that within Starbucks, that lower Bollinger usually leads to very large buys to the upside. Okay, see IBM. Let's look at IBM. Ooh, IBM's making some big moves here. And you can see this upper Bollinger mechanic playing very, very well today. You see how on Friday we closed above the upper Bollinger. This one wasn't a close above that. I know that for a fact. That was just a tap above the level. Um, it was Friday that had the upper Bollinger day one. So I don't know what it closed at. But day two, which is today, we see that we pushed higher highs. From those higher highs, we are now starting to see this downward consolidation. Okay. From that downward consolidation, what we're looking for here essentially is a handle because we close this cup. Top of a cup, we expect bearish structure. So we're already starting to see a lot of this occurring. And from that bearish structure, we should see a pull down to heading up. Now, I want to look at the weekly. So this is basically all-time high territory for IBM. So it's like, how do you know what to target in terms of a strike? Well, once we pull down basically to that 20-mile range again, or the lower Bollinger, then you just target the previous upside. Okay, so say we pull down to the 20-mile, maybe at this 250 range, right? Then you target that 320 strike. Okay, that'll give you a whole $70 of upside on this position. So currently it's a short. It would have been a very good short basically right at the beginning of the morning. Excuse me. But from that short position, this is kind of like a bullish short. You should be simply just looking for a handle for continued breakout to the upside. But you do want to let it cool down first. Again, you don't need to rush these trades that are being done on the daily time frame. Either short the top at the upper Bollinger or go long at the lower Bollinger at the bottom and just allow it to really do its thing. We have plenty of time again, so use that to your advantage. All right, let's go over. We'll go over Oracle. And then if there's any questions about kind of the long-term stuff, we can go over some of those questions. So Oracle here. I hate looking at Oracle because this candle right here cost me so much money. Oh, that was a terrible earnings. Random overnight $500 billion injection. Anyway, what are we seeing from Oracle here? Daily time frame. We see lower Bollinger, lower Bollinger, lower Bollinger. And basically all those previous lower Bollinger moves have already gone green. You know, basically the price is well above that. So in the current moment, we see that Oracle is sitting again on that day 2 upper Bollinger, which is telling us what? We should be seeing the higher high, and from that higher high, we should be seeing a downward consolidation. Okay. From that downward consolidation though, you do see that we have been basically just working to fill these cups. So target some of those previous areas. And from those ranges, you can say, okay, if I can buy a good entry at the lower Bollinger, maybe the 20 mod, but personally I would say just try to wait for the lower Bollinger, then what's our upside? Well, first range of the upside would be all the way to the 283. Even if you were to buy right at this current moment, that's a whole $50 upside. Now, again, personally, I would wait for a pullback because if you were to buy, say, at this 20 mile range, that'd be closer to the $200. That'd give you a whole $83 upside. Okay. From that, expect a little bit of pull down, pull back up, rinse, repeat, finish that next cup. Thank you. Finish that next cup, rinse, repeat, rinse, repeat. Okay, until we see the structure really starting to break down again. But we're not seeing that. Again, we do see this bullish cup being filled, which is telling us that, okay, bears had their time, you know, they did very good, but now we're starting to see a pretty large bullish reversal. We're starting to see some major structure within the daily time frame, which holds a lot of weight, and so the upside from here is very, very significant. You know, if you could buy the dip, then potentially you could take, you know, really OTM dated leap calls targeting basically all the way up to that 340 range again. You know, let's just look at some of those calls currently. So Oracle, let's say December. And while this one's a little more expensive, um, it wouldn't be as expensive once you get to a dip. But basically you could buy a December um, 340 call for currently it'd be about almost 2,000 for the option, which I know that seems like a crazy amount for many, but with a lot of these larger symbols, um, these are very reasonable prices. Okay, but you'd probably be able to buy that for about 1,600 with a dip. Okay, um, maybe even potentially a little less than that. So the upside on that contract though, let's say we get to, and let me pull up the calculator. Let's say come November, we get up to the 340. Well, that gives you a whole 286% upside on that contract. That contract that you bought for 1,600 is going to sell for roughly 7,000. Okay. Um, is that worth waiting a few months for? You know, half a year for? Absolutely. I mean, that's multiple months of some people's income. Um, so there's a lot of trades like this, even though Oracle is kind of an extreme example here with the contracts being a little more pricey. Um, you understand the concept that I'm trying to say here. You could really target this upside quite heavily. That's super awesome. Yeah, SN or SanDisk has been absolutely just killing it. We could look at SPCE. Oh, this is version, okay. I bought into this a long time ago. So, weekly time frame, it looks terrible. This is telling you that there's been multiple reverse splits, um, which that's never a good thing, but regardless, looking at the daily time frame, we see that, okay, daily time frame, and this will be a little more difficult to show just because of some of the extreme candles here. But what happens when you buy at the lower Bollinger? Massive upside, massive upside, huge upside on that one, jeez. Massive upside, little upside, massive upside. Okay. So currently we're seeing it breaking out very well. Okay. And with this breakout, this is forming again a cup, and we always want to target cups or inverse cups when we're looking at the daily time frame. It is important to target other structures like head and shoulders, inverse head and shoulders, triangles, things like that, but ideally you want to look for cups or inverse cups because these are some of the strongest structures you can have. Okay, so we have this cup forming very well. Okay, but we see that, okay, we're at the upper Bollinger Day 2. And very likely, as you can see, upper Bollinger Day 1, Day 2, pulls back, starts trying to push up again, does not secure the upper Bollinger on that session. But Friday it did, and with today, we expected a higher high. Now we're at the top of a cup. We have the Day 2 upper Bollinger higher high, which is telling us what? That very likely we're going to see a very minor pullback. From that pullback, since we are in a larger cup structure, what can we expect? We can expect it to try to close the next gap, which next gap on Virgin Galactic would be around that $18 range. Okay, so if you can be patient, wait for a push downward, buy the dip on the push down, that's going to give you a very, very profitable trade, whether you do equities or you do some form of dated contract. But the upside is very, very substantial right now, okay, after we have this minor pullback. So, you know, Virgin looks super, super good right now. Um, you just need to allow it to pull back. And that's a big thing that I think a lot of people struggle with is just allowing it to have the time it needs because they see a ton of momentum. Excuse me, my voice is still a little bad, but we see the momentum very strong and we want to buy into that momentum. Um, that's rarely ever a good idea. It's very rare to see an upper Bollinger just continue pushing up, 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 up. Um, Usually you see that pull downward before pulling up. So buying super heavily into this momentum could be a massive trap. So a lot of the pullback, once you get the pullback, that's going to give you a very significant upside. So I just want to look at the SPY really quick. SPY is hitting my level, and it is potentially forming a double bottom here with a micro cup, which is telling me that very likely we will be heading to the upside today. I haven't looked at the VVIX or anything, so a little too early for me to say that just yet. The HIG is down very, very substantially today, but we did have this cup closed. And this kind of alludes to some of that upper Bollinger Day 2 that we've been seeing throughout tech, like Snow, Now, Palantir, some of those other symbols. The HIG is telling us that very likely we're going to have a very short pullback, even if it's just literally a day or two, into pushing into higher highs. Okay. My candles are off a little bit, or my squares, but I was talking about a previous lower Bollinger move. How it goes from the lower Bollinger to the 5 mile or the 20 mile. Lower Bollinger 20 mile, lower Bollinger 5 mile, lower Bollinger 5 mile, lower Bollinger breakout. Okay, so buying those lower Bollinger moves are still super good, and even within the HIG, it's showing you that this works very well. Because if you bought any of those lower Bollinger moves, you'd be heavily in the green right now. So stand by the mechanics of the lower Bollinger or the upper Bollinger. Again, shorting upper Bollinger, going long at the lower Bollinger. And you could use this as an equity trader too. You don't just have to take options. But as an equity trader, it's like just using our Uber trade, for example. Let's go back to Uber for a second. From buying this lower Bollinger, if you were to buy it at the perfect moment, you would have gotten it for about 69, almost $70 a share. Let's just call it $70 a share. Well, $70 a share, that gives you a whole roughly 10, almost $11 upside per share. So would taking a few of those shares be very, very, lucrative? Yeah, absolutely. There's room to gain on it. That's very safe because are we going to continue pushing down to this lower Bollinger? Very likely not. Okay? And because we're not, then what does this start to do? This starts to close cups to the upside. Okay, so that makes it a very strong potential long position, even if there's this very scary looking head and shoulders. Again, buying into the lower Bollinger is how you profit. Yep, but even with those upper Bollinger pushes, usually it goes from upper Bollinger to retesting the 5 mile, which I'm not really showing it here because I'm not showing the moving averages. But let's just look at this, and my 5 mile is the green, that green line. So what happens when we push the upper Bollinger? We head to the 5 mile for a retest. Now this one went back all the way to the 20 mile. Upper Bollinger again. What happens? Back down to that 5 mile, except this again retesting the 20. Upper Bollinger. This one's going to be a little difficult to see. But what happens? Pull down, retest that 5 mile. From the 5 mile retest, head back to the upper Bollinger. Then what happens again? Back down, retest the 5 mile. This one went all the way to the 20 mile. Upper Bollinger, proper 2-day upper Bollinger move here. What happens? 5 mile retest. Okay. Sorry, I'm just trying to look at this for a second. But we can always rely on our technicals for that. Even if we're having tech breaking out like crazy, it might look like it's just constant upper Bollinger movement, but it could be that 5 mile retest into the upper Bollinger again. Can I explain SPY? Yes, and I'll look at Microsoft too. Absolutely. But let's take a look at the SPY first. Okay, with the SPY here, go to the 5-minute time frame. We see that the thesis of the day is that, again, either we're going to build this cup and handle and push to the upside and basically, reclaim a lot of this lost weight that was sold off this morning, or we are going to reject this and push to the 5 mile here. Now, the 5 mile, again, is on the daily time frame. It's this square right here, which I should mark in the green. But if we're going to have a 5 mile retest, then our downside is going to be very, very massive. Now, currently, we're not really seeing that. We're seeing, pretty bullish structure. We see cup formed. We see handle formed. See from that handle, smaller cup being formed. So what's this telling us? It's telling us that very likely we're heading up towards that 758 range. Okay. And this is on the 1-minute time frame, so. But from that 158 range, what's that likely going to do for the SPY? Closes a cup from the top of that cup, which will coincide with that upper Bollinger, creates a short position to the downside, and from that downside, very likely to continue pushing upward. Okay. So that's what I'm looking at right now. The structure overall looks good, but I do want to look at the VVIX and everything. VVIX is still super, super, super low. Again, on the VVIX, there's kind of, the stop light here. You have the green light, which is basically when it's dealers are not hedging very much. Okay. You have the cautionary range where you can still see major buying, but that's when you could start really seeing major selling as well. And then in the red range, it's kind of like, okay, this is when dealers are really starting to sell and hedge their positions. But within our VVIX, everything looks good right now to continue pulling down. We see a little bit of a cup formed, which doesn't hold a lot in terms of the volatility. We see semiconductors. Just want to hide the drawings for a second. Semiconductors had a pretty decent move here, and let's just delete those. We see how we had the upper Bollinger day 1, day 2, 5 mile retest. Try to break out back to the upper Bollinger again. I don't think that closed the cup, but I want to see. No, it has not fully closed the cup. So from where this range is currently, which this is the hourly time frame, It's actually telling us that potentially we have some major upside here. Okay, potentially we could be heading all the way back up to that 595 again. Reason why I say that, hourly lower Bollinger, what usually occurs? Usually major buying. Just take a look at the hourly time frame on semiconductors. You know, look at every single lower Bollinger move. What generally happens? You generally see very, very large buying to the upside. So this is telling you that potentially the market could be heading up quite a bit today, okay? Or over, the next few sessions, which actually makes me want to remember to open some of the Success puts for this Friday. No, I want to go 2 weeks out. Just 1 second. I'll type the contract that I'm taking, by the way. Okay, so I took the Sox S. Let me see, I think it was July 11th. July 12th. Okay, so that's what I took on semis, and the reason why I took those on semis, and again, Soxus is a bear ETF, so I'm just gonna type that in chat. Okay, so again, with Soxus, this is this fund right here. Again, I'm taking the 6 puts for July 12th. Okay, with us seeing, the very likely potential that we're going to try to move upward within the market, I like those positions. Take at your own risk, because again, potentially we could be breaking down to test the 5 ball. Which if that was the case, I would have to add to those positions. So, however, 1 minute time frame, this cup and handle still looks extremely strong. We should very likely be seeing a move upward today, again to that first level, that's 758.08. Okay. Now, are we going to range all day? We could. We don't really have any crucial data coming out today too much. So unless there's any tweets or anything like that, then absolutely we could sit here and just range the entire session. Especially if the market is just trying to build this larger head and shoulders, then they're just going to work on grabbing all that liquidity in that range. Okay. Build the left shoulder, the head, right shoulder. Okay. So today isn't fully set to the upside, but I am targeting the upside because again, semis on the hourly time frame look, very, very solid to the upside. We see our VVIX push down very heavily today. Little uptick. I'm not super concerned about that just yet. But this is why I was talking about at that 20 mile range that you want to target both that 7 754 and both the 758 or 759, whatever we talked about at the time. Um, so yeah, it looks good to me. It's just not within the range of an entry. The entry this morning so far would have been down there, and we already would have had an exit on this position at that 20 mile. So kind of regardless of what's going on with SPY right now, um, we wouldn't have had too many entries just yet. Okay. We did talk about straddling strangling the 20 mile range, which is taking two out of the money contracts, but fortunately I did not do that because I was talking about other symbols, so I don't really care too much about that. But I do see quite a lot of upside today if we don't really start pushing down to retest the 5 mile. Now, one thing to be aware of is that technically we could be working to retest this 5 mile range. Okay, we're right above this liquidity, so if we don't have that major bounce, basically if this does not bounce upward, then it should take this entire 5 mile out and then retest that level. For the Bollingers, is that the settings you're looking for? Yes, Link. I apologize. I mean June. So for the Bollinger settings, we have the length set to 20. So I'll just type it out. Length 20, width 2, closed. Okay, so those are the Bollinger settings. I might have said width, but sometimes it says as length, but yep, very range bound, but don't trade into that chop. Just simply wait for the entries on either the top or the bottom here. Um, no reason to fight the chop. I'm actually kind of happy I didn't take those two strangled positions, even though they're acceptable. I really dislike taking positions at that 20 mil. Yeah, you're very welcome. And let's look at Microsoft for Mickey. Just 1 second, let me take a drink of something really quick. Alright, apologize for that. Okay, let's take a look at Microsoft. So, Microsoft, sorry, spoiler alert from last week. But with that upper Bollinger Day 1 on the daily time frame happening on Friday, we were really expecting this, basically the push of the higher high into the downward consolidation. This downward consolidation should target this 5 mil. And the reason why I'm saying not so much the 20 mil is because we've been sitting at the 20 mil for quite a while. Generally, you usually test that level every 20 trading sessions. So we don't really need to pull too far down to retest that. However, we have very bullish structure here. And I want to hide the moving averages, but we have very bullish structure here to that 483, basically, or 482. Um, we do see that Microsoft is currently below the 200-day moving average, which generally most stocks do not like to trade below their 200-day moving average, which means that Microsoft has been in a dip buying range for quite a while now. And not only that, we see that there's this inverse head and shoulders liquidity being built here, which is telling us that we do want to head upward. So from this consolidation, whether it's just to the 5 mo, whether it pulls down to the 20 mo, watch for where that essentially that bottom is at, and from there you can take, basically a whole $50 upside, $53 upside, which is, very, very awesome. And not only will it take that upside, but it'll be breaking that 200-day moving average, which is telling us that, okay, very likely they're going to try to send this all the way back up to that 550. So if you can buy a dip in here, which I know a dip opportunity will open, then taking some either shares or very, very out of the money options that are dated, you can get all the way out to December at that 550 range. And those are probably going to be fairly cheap at that point. I mean, let's just take a look at the options currently. So let me open Microsoft on my phone, 1 second. So looking at December, we see that the 550 calls are basically 1900 each, which again, this is a bigger stock. These bigger stocks, that's very, very reasonable pricing. This is a lot like how we were discussing, I believe, on either Oracle or Palantir, where from this pull down, that option should probably be around 1600 at that point. Well, what happens if we do hit that 550? Let's just look at the calculator on this contract. So let's say come November, we hit 550. Well, that's going to bring that contract to about 2700. So not the best contract, but the IV on it would climb quite more because this is just showing a 33% volatility. That volatility would be a lot closer to the 90. So let me factor that in really quick. Yeah, that's more like it. So that contract would sell for about 7,300, give or take, okay, from a $1,600 contract, which would give you, roughly a whole 6 months, plenty of time to allow that to gain the premium it needs to gain. We'll do some 0DTs, but I want to wait until the opportunity really opens up and have not seen that just yet, especially if we're going to potentially have, a breakdown here and a 5 mile retest. Now, I want to look at the 1 minute time frame. 1 minute time frame, this can be a double top because we do have that inverse cup formed. if that's going to be a double top, then that turns this into an inverse cup, which we identified already this morning that there's already this very large inverse cup. Oops, did not draw. There's already this very large inverse cup. Okay, and from the inverse cup, we would expect, a handle. This could potentially be that handle, and if that's the case, then that's going to give us this 5-mile retest. And this is the 5-mile on the daily time frame. So again, the bounds of the 5-mile bring it all the way to basically that 755.80, all the way down to that 751.70. So potentially we could be seeing a fairly large red day here. However, one thing we do need to pay attention for is that as long as this inverse cup has not closed, then if we push to the lower Bollinger here, this can turn into a double bottom and push us up. Okay, so if you're wanting to take positions today, which I'm not sure I want to take 0DTs today, to be honest, just continue watching the VVIX, which it has been on an uptrend currently. It did pull down all the way to the 88.24, and it's currently at 89.44, which means that dealers are hedging a little bit. And we did see a lot of different symbols showing that same pattern of being within that upper Bollinger Day 2, which means that we can pull down and have that 5-mile retest before continuing upward. We also have the HIG selling quite a bit today. It had a high of 79.84 and it's currently at 79.69. Excuse me, not meaning to yawn. But with that said, we have two bearish signals that are telling us, outside from the SPY itself, that potentially we could be heading down to retest this 5-mile. So I would really be watching very closely for that. But if this does not break down, then this could be a really good call opportunity once we get to the lower Bollinger, because again, that can take you all the way to the basically 759 on the day. Sure, I could look at DXYZ. Is that based off the dollar? Destiny Tech 100, okay. Let's take a look at this. Oh, I like this, hold on. Doesn't have a whole ton of history to it, but it has enough. Has nearly 2 years. Oh, what's the first thing we see here? This cup closing. Now, from that cup, sorry, I'm just going to mark some areas that don't hold a lot of value real quick. This cup has not been completely closed yet. Now, one thing that you do have to pay attention for here is that we do have this micro cup, and this has closed. Okay, from this micro cup, we're seeing that we pulled all the way from the upper Bollinger down to the 20-mile. Now, this can turn into a very large bounce to the upside. Okay. However, if this continues breaking down, then I would wait for an entry within that lower Bollinger, because if you're patient for that lower Bollinger entry, then again, you can target calls, or if you're taking shares, that would basically give you a whole $40 upside. Okay. But with this 20-mile being tested, potentially this could be a quality position as well. Usually not the range that I like to take positions in, but let's just kind of see what the options are on this. So let's say September. So not a whole lot of liquidity, but people are starting to stack that September 70 strike. So a lot of people are seeing, I guess, exactly what I'm seeing here. And for that, that'd be about $900. Okay. Now, doing the calculator again, let's say this moves up to 70 by, let's see, this is for September, so let's say by August. Well, that'd take that contract to about 1500, 1600, which doesn't seem like the best right now, but I do believe the volatility and everything on it would be a little higher than what it currently is. It is showing quite a high volatility on these contracts right now, so you do have to be a little cautious with that because you could be buying very heavy volatility and paying a lot extra due to that volatility. Um, that's one of the big reasons why I liked some of these other contracts we talked about, like Uber, um, Starbucks, things like that. Um, Volatility is lower, will climb very quickly, and I think it just has a lot more volume and everything. The market cap on this is fairly low, almost 700 million. So not the biggest. I mean, even compared to like our Uber trade here, the market cap on Uber is 147 billion, you know, compared to that, or even on Starbucks, where it's 109 billion. Um, Ideally, you want to try to target options that have that higher market cap. Um, it's not always the case. Sometimes these small cap companies can do very, very well. And there's some of them that we are trying to trade, like Open. Um, we have a whole list of them in the Discord that we're working on. But yeah, that's kind of what I'm looking at for that right now. Hold on, I want to look at the SPY here. I went ahead and already entered Starbucks, so position's down just slightly, but completely okay with that. Are we expecting SPY to go up, or is it still going to scale back and forth? Currently, we're seeing a breakdown within some of this bullish structure. We see that we did have this cup formed. However, it has now been invalidated because the price has gone below the cup. So that has invalidated that previous cup. So with that previous cup being invalidated, we now have to look at this as, okay, potentially this could be an inverse cup to the downside. We're right at the top of where the 5 mile is currently. So this could be a upper bounds of the 5 mile being retested, which tells me that if we're going to be doing that, then we're very likely going to retest the entire level. Okay, that means the actual 5 mile itself and pulling down to the lower bounds, retesting that level before heading upward or downward. Okay, now this is the 5 mile on the daily time frame, which is a very key level. And it's been needing to be tested for a few sessions now. So it makes a lot of sense that this is occurring. And if we don't have a major bounce here again, then the downside expectation should be pretty large. Basically we should hit that 751, have a bounce from that range because usually with these moving average retests, you usually want to test the upper bounds of it and the lower bounds of the level. So if we're heading down today, we have quite a lot of downside. Yeah, you're very welcome. I went ahead and added a couple more of those Starbucks calls. And again, those are the July 17th, 115 calls on SBucks. Sorry, trying to type this. And my current average on those are 0.40. So the positions that I've taken today are the SOXS puts, those 6 puts. Is this just a big inverse on which time frame? To me, this looks scary, and one of the main reasons why is because this was a fair value gap, which means that we had good news, market liked that. Second bad news happened, they removed that entire gap. Okay. Um, which is telling me that, you know, potentially we could be having a pretty massive down day today. We're starting to see this inverse cup closing. Um, we still have about a whole dollar to the downside before that really occurs, but if we see that inverse cup close, that's going to be a very good, um, I don't know, signal that we're likely going to build a handle on that inverse cup and then continue downward, retest the 5 mile level. However, again, this is kind of like the battle line here. Um, if this level is broken out of, then that's telling us, okay, we're breaking out of the upper bounds of the 5 mile. Very likely that would be a bounce. But if we don't do that, then we should be expecting the full 5 mile to be retested. Potentially it could be tented. I don't know, the more that we're sitting in the upper bounds of the 5 mile, it's looking very, very sketchy. It looks a lot like they want to do a daily 5 mile test today. Oh, okay. Hey, John. It's nice to have you on the stream. You're coping. I think the downside today could be pretty large. Especially we're seeing our VVIX just absolutely flying today. Again, it's still in this green area, but it's getting very close to that cautionary range, which it could pull to that very quickly. And we also have the HIG extremely weak right now. It's just been selling off pretty much the entire session, which that's not good. This is telling you that big money is seeing some downside coming. So very likely we see this 5 mile test occur today. So for precious metals, and let me just look at gold really quick. I can tell you kind of exactly. So I think I messaged you the other day when we got down to here. I said, um, buy GDXW, okay, because that's very likely going to be a very good opportunity. Now, GDXW trending downward a little bit, but it's still like one of the most top of the line funds you can enter. Um, the dividend on it is just absolutely obscene. Um, yes, it has a higher NAV, which means that if gold continues trending downward, we can see it, um, continue to pull to the downside. However, we always buy into these lower Bollinger moves, especially on gold, because gold has been just proven that every time we get to this lower Bollinger, it likes to have a very large bounce. Now, with the war ongoing, um, yes, it takes a very heavy weight against precious metals. It's going to take from precious metals, going to take from treasuries, it's going to take from crypto. It's going to take from a lot of the stocks that aren't the main like semiconductor pumps right now. So it's like pretty much the entire market's battered down besides semiconductors and some of those tech companies, right? I know space is doing good right now, or space related stuff because of the SpaceX IPO coming out soon, but I would still be slowly adding to these lower Bollinger moves on the daily time frame. Um, Again, I think the upside on gold is massive. You know, again, this is really where I expect gold to head, and it doesn't look like that currently. I know a lot of people might say, oh, this is forming a head and shoulders so that it can continue breaking down. I disagree. I believe that it will find support, especially as the war starts to, um, you know, finally finish up. Yes, we're still a while away from that. Um, Obviously, we can't really predict exactly when it will end, unless, we're following Polymarket and watching what Baron is taking. But besides that, we we just have to kind of take it day by day, and we know that gold has still been holding its weight very strong, compared to a lot of different sectors and individual symbols. Gold has been holding super, super, super strong. And same with the ETF too. It may not look like it, but this range has been a fortress, okay, for, this conflict ongoing. And that's kind of what this red square is when the conflict started. Um, but this has just been a fortress right now. Okay. Can we see some more downside? Absolutely. But if you target those lower Bollinger on the daily time frame, then just simply take it out of money, call trying to target that upper Bollinger. Um, Even the 500 strike, I would still be trying to add to those if you can get for like, really, really dated, like December. Um, that should clear the war by then, and a lot of this oil volatility should be cleared out of the system, and we should see this form a cup to the upside and really be able to capitalize on that. So that's kind of precious metals as a whole, um, including silver, but one thing about silver is that silver will be a little more volatile. But even then, even with silver being super volatile here, and let's just hold on, I gotta say bye to my daughter really quick, um, and I'll be right back. Alright, sorry about that. I am back. Okay, so I want to look at the SPY really quick. Let's see what's going on here. So if we get a rejection here, then just remember that we still have this very, very bearish structure building. Okay. It didn't validate the previous cup. It has not formed a, excuse me, I can't talk. Has not formed a new cup yet. As you can see, this cup hasn't fully completed to the top. So if we see a rejection from this range, then this can pull down very, very hard. So that's super concerning. So be careful if you're holding calls. Now on the 5-minute time frame, we're seeing the 20 mile retested, which again, this can be a rejection zone. The 20 mile is going to either give you that upside Bollinger push or the downside. And it's looking very likely that we're going to get that downside Bollinger push. Which, if that occurs, that's going to close this smaller cup right here. And from that smaller cup closing, it would then aim, I can't talk right now, jeez. It would then aim to build more liquidity to close that cup to the downside. So this is telling us, where's parallel channels? This is telling us so far very heavy consolidation. And just assuming we're going to trade from top of the channel to the bottom. This is telling you that there's very heavy consolidation in here today, which is concerning. Now, this can form into a buying channel, but so far I'm really not seeing that. If that does turn into a buying channel, then this consolidation changes shape a lot. Because that would start taking us back up towards the high of the day. Okay, so this level right here is super crucial because if we break out, then this turns into a double bottom. But if we break down, then we're going to the 5 wall. So today is a really, this is a super, super crucial level here. Now, I do want to look at the VVIX because this has been pretty much on a tear the entire session. It's tapering out a little bit, but still very, very, very elevated, so we need to be cautious of that. HIG seeing a little bit of buying reprieve, but it has still been selling very aggressively today. So this is still considered, extremely aggressive for what's standard for the HIG. Now on QQQ, we have not closed an upward cup here. Now, yes, this can turn into a double bottom, which would be very bullish. And we see our OBV/ADL really doing well right now. Okay, so if we're going to close this cup, there really isn't too much more room to go on that. From closing that cup, again, we would expect bearish structure at the top. Now, one thing that still is concerning, and it's pretty much going to be concerning the entire session, is that there is this very large inverse cup formed here. And until this is invalidated, meaning we need to push all the way to close that cup, okay? So I think this is the inverse head and shoulders you're talking about, tinted. But we would need to build more liquidity and fully close that cup to the upside. Okay. Um, so that's very concerning. It also, it actually invalidates this previous cup here too. So this cup that was built here has been invalidated by this large inverse cup to the downside, which is telling me that, okay, potentially we could be forming a handle to continue pushing down. So today is a very, very in between day. Um, really don't like saying that, but it definitely can go both ways, and that's something I don't like. Now with semiconductors, we are seeing some good signals, and this is why I'm glad we're in that short position. But hold on. Anyway, this is not the short pos excuse me, not the short position, but the SOXS put, which is basically a semiconductor call. We're seeing some very quality strength out of semis right now. You know, we're seeing the cup close, likely building a handle. From that, very likely going to push up towards this 577. So it's looking very strong, um, which is kind of the only thing on the market that's looking strong right now. Um, compared to the SPY, compared to QQQ. Well, I mean, QQQ has a little strength, but it has a lot of room to go before we get there. Um, but out of anything, semis look very strong right now. So that can absolutely carry the market. Yeah, very choppy day. It's something I'm really not too keen on trading into today. Can we look at meta? Yes, we can. All right, meta. Can delete some of my older drawings because they don't matter. So meta has some good things here. But as you can see, we had that push into the upper Bollinger, pull down, and consolidate back to the 20 mile. Now, a couple concerning things is that you have this extension to the upper Bollinger right there. And so far that hasn't been filled back up yet. We potentially have this inverse head and shoulders, which can be telling us that, okay, if we're going to get our push down and get the liquidity we need, then we absolutely can head upward. However, we also potentially have this very large inverse cup forming. With us being at the upper Bollinger range, that gives us a lot of room to push down to that lower Bollinger. But again, from that lower Bollinger push, it would give us a call opportunity to the upside, or a long opportunity to the upside, however you want to define it. Which would still be within that inverse head and shoulders. So that looks positive, even though this very large inverse cup is kind of looming and very something I would be very cautious of. Okay. Now, with that said, we do have this very large cup built here. Okay. From that very large cup, this can be a very large handle. Okay, and I know that just looks ridiculous, but it still can be that. But just, remember, try to take the position at the lower Bollinger if possible, because that's where your runway is. Okay, if you take your position at the lower Bollinger, that's where you're going to get that major upside. So allow it to pull back. It looks like it wants to have that little bit of reprieve. But once we get down to that lower Bollinger, um, definitely remind me because I don't watch meta specifically, but remind me about that, and we'll probably try to set up 700 calls to the upside and really capture this range, and we could probably get a whole $110 on our contracts, if not more. So I think that could be super good. But it needs a little time. Seeing Spy starting to complete this cup a little bit, but it's still not there yet fully. Yeah, I think the upside on Microsoft could be absolutely huge. Um, but yeah, let that pullback happen. From that pullback, it's super good to go. I mean, on Meta. All right, everybody, today's going to be a little bit of a shorter stream. Um, so I am going to be streaming probably another 10 minutes. So if there's any final questions you'd like to ask today, right now is a perfect time and I'll be happy to, go over whatever. But I'm not day trading too much today. Um, Still feeling a little sick, even though my voice sounds a lot better than last Friday. Um, I'm still not feeling too hot, so Semi is giving us a very nice breakout, which again can absolutely carry the market. So if semis continue pushing, then market should push upward. Our Uber calls are up 40% so far. So they're currently at $53 per. Bought them again at $38 per. Success calls are up about 20%. Starbucks calls currently down a little bit, but I'm okay with those being down. Again, we're at the lower Bollinger, so this is still the range that I'm looking for those contracts to head upward. And the room on the upside is absolutely massive. So even with this push down, I like it a lot. Yeah, thank you everybody. I appreciate it a lot and I'm glad I can help. I know last week was a little difficult, but we will get through it. I know that the SPY has been super, super choppy, um, which might make it a lot more lucrative to be trying to trade like QQQ or semis or something, if you're trying to zero DT trade right now. Yeah, semis are looking like they want to push this 577 today, which would be very, very solid for the market overall. But I appreciate you all taking the time to come watch this morning. Um, Even with the bad last week, I know a lot of people got mad about that, but not a lot we can do when the market's sitting in a 80-cent range for for 4 hours while building structures on both sides to break out the entire time. Very difficult. Um, it's just one of those times where hindsight looks a lot better than what it did through the actual trading session. But anyway, thank you all for watching. Um, I'm not seeing any final questions, so I will be here tomorrow morning at 9:15. Now, tomorrow we will try to take some day trades, um, because I should feel a lot better. And if I feel good, then I want to be able to day trade stuff. So, yeah, look forward to that. We'll talk about more trade setups that we'll be going through, and again, I'll be working on these in the Discord, but we're adding a section where it's going to show like equity trades that basically only myself and other, qualified experts in the group are going to be able to post those trades on, where kind of like the Starbucks, the Uber, things like that. Um, oh, no worries at all. It's let me tell you, it's 115 call for July 17th. And those should still be perfectly good to buy. Um, but with the Discord, we're changing it so we'll have like an equity area and an options area where if I see, for example, like that Starbucks um, call to the upside, I could post that in there without it getting lost or just being randomly throughout the stream. And same with some of the other experts in the group. Um, we're all going to be working on posting in that same area. So, highly, highly welcome everybody to come join the server. You can enter for free and you get access to the unusual whales and our in-house Gex Index tool. But other than that, thank you all so much for watching today. I hope everyone has a great day. Tented, I hope you get your upside breakout. Um, Again, semis look super, super strong right now. So as long as those hold, then your upside breakout should be very quality. But I will talk to you all in tomorrow's stream. And again, thank you so much for stopping by and watching. Take care, everybody. The 757 call 0 DTE, I do think that that's reasonable. Um, but randomly 2417, you gotta get that YouTube ch name changed. It's so hard to say randomly all the time because it's like I want to be able to talk to you and identify you that I'm talking to you instead of just being like randomly 74 or 757 is good. something like that. So try to get that YouTube name changed. But other than that, take care, everybody. Um, I appreciate you all, and I hope that we can make some great money over the next few weeks. So I'll see you tomorrow. Thank you all. Have a great day, everybody.